What is up, everyone? How are we doing today? It is March 12th, 2026, Thursday, and today I'm going to be going over the two trades I took today. Two entries. We had a 30-second inversion to the upside, and literally 2 minutes later, we ended up shorting. And both trades worked out perfectly. It's been a great day. March has been great for us so far. And yeah, let's just get right into it. So coming into the day, I had a very neutral bias and wasn't too sure on what price wanted to do. As you can see, we do have major draws up here. We have stacked highs all above us. But we also have this major 4-hour unmitigated gap that hasn't even been tapped into. And over here, we're disrespecting bearish, we're respecting bullish, we're disrespecting bearish. And overall, price is just kind of in a chop. And I really want to see what market does at open. And on the 1 hour time frame, we can see we are clearly respecting this bearish gap. So right now, it is very obvious to me that we are going to sweep these London lows. And hopefully we can end up sweeping Asia and even tap into this unmitigated gap. So I would love to see price tap this low and continue higher. Or I would love to see price just dump through, sweep all of this liquidity, and then taking continuations long after tapping into this unmitigated gap. Now coming into market open, we can see price immediately sweeps out these London lows and we get a huge candle displacement up to the top. And like I said earlier, I wanted to see price tap into the London lows or Asia lows and get continuations off of this. Now we have a lot of targets above us. We could have either targeted these London highs if we had incredible displacement and a true change in order structure that would give us proof that price really wants to push up all the way. But if we actually look how far this is 130 points away. And yes, that is very possible. However, like I said earlier, my bias is still bearish. I still want to see Asia get swept. I still want to see this 4-hour get tapped into. So I didn't want to take such a high RR trade and target these London highs. And instead, a better target is, look, we have equal lows right here. Equal lows are one of the best draws and best magnets for price to tap into. So we tapped into that, and I would love to take in long to this position. However, we don't have an entry on the 1 minute. But if we go on the 30-second, you can see that we have a inversion right here. Now, if price displaces through this inversion fair value gap, I would love to take a long position. I would have my stop loss at the equal lows of this bottom candle, and I would have my take profit at these equal highs. It's a nice 1.7 RR. And like I said, I could target these highs up here. However, it just brings a risk reward ratio so high, almost 4. And the other reason why I didn't want to target that major of a high is just because the only time frame inversion we had was a 30-second. We didn't have a minute or 2 minute or 3 minute or 4 minute. So just having a 30-second doesn't give us too much conviction that price wants to shoot all the way up. However, it gives us enough conviction that price wants to draw an internal liquidity, such as these equal highs. So as we can see, if we fast forward one more candle, boom, we get that displacement. We had the stop loss at the equal lows down here, and we had our take profit at the equal highs. And as we watch price play out, I want you to think of what I was saying earlier and my overall daily conviction. So price plays up, we go up, we push up, we almost take our high, but we ended up starting to chop a little. So the trade actually ends up playing out and we took our take profit. So that's one trade of the day. But there was also another trade opportunity that I noticed mid-trade. So after getting out of that long position, I still had a daily bias of us being bearish. We had this 4-hour unmitigated gap below us, as well as major external draws on liquidity. We still didn't take out these Asia lows, and we still didn't even tap into this unmitigated gap yet. So I'm looking for price to continue lower. And if we take a look, we can see that price ends up tapping into this unmitigated 5-minute fair value gap. Now, this is a major condition when looking for an entry. We had an unmitigated gap right here and we tap back into it. And now I would love to see an inversion to the downside. So not only did we tap into this 5-minute unmitigated gap, but we also created a bearish SMT, right? We're looking on NQ and we can see we tapped that and we swept that gap. And if we look at ES, we can see that we never ended up trading higher or sweeping that gap. Now, this just gives us a lot more conviction that we're in bearish order flow and price is going to come down from now. And hopping onto the 1 minute time frame, we can actually see that we do create this inversion fair value gap. And this was the highest time frame. We didn't have a 2 minute or 3 minute or 4 minute or 5 minute. We just had that 1 minute, which is perfectly fine. And to give us more conviction that price is going to go down, I want to see big candles. I want to see big displacement to the downside. Now, what is there to target? We have these London lows, which you already swept, but more importantly, we have this 15-minute fair value gap. And not only do we have this fair value gap, we have this intermediate low resting in it. Now, in case you don't know what an intermediate low is, it's essentially just a low resting inside of a fair value gap, as you can see here. And this is a very strong draw on liquidity, as we already tapped into the gap, so we know that price is probably going to end up sweeping it. And we have an even stronger external draw on liquidity, which is these Asia lows right here. And I would love to target these if we have big displacement and keep coming down. Now, in this situation, I am perfectly fine with just trading into this 15-minute intermediate low. Why? This is already almost a 2RR trade. And for me, with my strategy, I'm taking a higher win percentage with a smaller RR any day over a lower win rate with a higher RR. And this is because I trade a lot with prop firms, and you have to learn how to play by the rules and play by the game. And prop firms reward consistency and small wins over massive wins and less consistency. We can clearly see that if we displace through this, we will be bearish and we will be targeting those lows. And the Asia lows down here is a fantastic draw on liquidity. For me, I would just rather be safe than sorry. I would rather take a nice 2RR trade than try to risk it anymore. So let's fast forward and let's see what price does. Price displaces through this inversion fair value gap. We get our entry right here, have our stop loss and our targets at this 15-minute intermediate low. And what happens? Price just rips through. It rips straight through our TP. And I believe we even take out the Asian lows below us. So we actually did end up sweeping these Asia lows. And this was a great draw. If you had this as a target, good job. I just targeted this intermediate low to rather be safe than sorry. Now I could have had my take profit one at the intermediate low and the second one at the Asia low. However, I just like to keep it simple. I had my take profit here, price displaced quickly, and we were out. Now this is a very clean and standard trade. We tapped into an unmitigated gap. We got an entry off of that. We created a bearish SMT, and we had major draws on liquidity under us. We had the Asia lows, we had a 15-minute intermediate low, and our daily bias showed that price wanted to continue lower. So this is just an absolute great setup. And yeah, I would take this any day of the week. But yeah, that was it for the day. These moves happened very fast. I think this first move, yeah, look, this is 9:32, and we already got that inversion to the upside. That was within 2 minutes of the market open where we already got a trade. And then at 9:34, we end up creating that 1 minute inversion fair value gap. And 7 minutes later, we end up displacing through that and getting our shorts to the 15-minute intermediate low as well as the Asia lows under us. Now, those two trades were within 15 minutes of the market opening. And that is personally when my strategy has the highest percent of winning. I love trading closer to market open as that's where all the new money comes in. That's where all the volume and volatility is. So being able to capture those quick moves right at open compared to 11:30 or lunch hour or PM session when volume and movement and price action is kind of dead. But that just works for me. If you find your strategy and you can stick to it, that's all that matters. Consistency is what pays out. Same thing with prop firms, like I mentioned before. Prop firms reward consistency. You're going to be able to get a lot more funded accounts, a lot more payouts, and overall, you're just going to find a lot more success in your trading journey with prop firms when you have a higher win rate and a lower RR. That's just the rules of the game, and you have to learn how to play the game in order to be profitable. Again, if you have a strategy that you may have a lower win rate, but you're profitable because those wins make up all those losses, good for you. I'm glad you have that. Just know that that strategy is really not that beneficial when trading prop firms. So if you're doing that, it's much better to be on a live account where you can control your own risk and you don't have to deal with consistency rules or any other BS or problems that you might run into. But yeah, that's going to wrap it up. I hope you guys enjoyed the video. If you guys can like, comment, share, subscribe, follow, whatever it is, anything would mean so much. But yeah, that's it. I'm just going to go ahead and finish this energy drink, go on a quick run, release endorphins, get that dopamine flowing. And yeah, I'll catch you guys tomorrow. Peace.